to let you know that trading is risky if you didn't know that already. And I will keep an eye on the fossil, thank you. And that whatever we discuss is for educational purposes only. Okay, so there are 7,598 ways to lose money day trading. There's probably more than 7,500. Here's my absolute best advice on how not to do it, how not to lose money. Follow these 3 steps on every trade. First, focus on plays that have very compelling elements or qualities about them. Don't waste your time trading stocks that are moving without understanding, without having a catalyst, without understanding what's driving the price. Without having a catalyst. The catalyst, I'll talk about that in a minute. But in other words, trade strategies, not random patterns. Sorry, one sec. I need to prepare. I haven't prepared the entry for the fossil. I wasn't thinking that the fossil was going to be ready to go so soon. So I didn't prepare an order for it. So it's 770. Sorry about that. Just 1 second, please. 770. Stop is under. Stop is too tight at 45 because I didn't think it was ready to go just yet. So I'm going to change the stop to 730. Fossil stop is 730. So that means it's a 40-cent stop, okay, on fossil. I wasn't ready for it, but now I'm just putting an order in the system for it, okay? I didn't think it was going to be ready to go, so that's why I didn't put an order for it, but now I have an order in the system. I have an order in the system for it. Okay, this way I don't miss it. So trade strategies, not patterns. So what is a strategy? You might ask, right? What is a strategy? Trading strategies means focusing on charts that have certain elements or qualities about them, usually daily charts, then looking for high probability entry patterns as a way to execute the play, as a way to enter into that daily chart. Okay, so we only use that. We only look at the intraday time frame, or time frames, I should say, when the daily is also pretty compelling. Okay, if the daily is not compelling, I don't even bother looking at the intraday chart. So this is why I don't trade the same names every day. This is why I don't trade Tesla every day, or Apple every day, or Zoom or something. I only trade things that look good today on the daily chart. Okay? So here are the 3 steps. The first being, find a picture of power. Find a compelling daily chart, or we call it POP, picture of power. Fossil is going to trigger. There are several you can look for. My favorite are gapping stocks. This is why I spend an hour putting together the gaps list in the pre-market, almost an hour. So gapping stocks, but certainly extreme relative strength. Reversal plays like climactics, like we did on the like the INO this morning, or the SRNE yesterday, or the JWS even this afternoon. And scalp plays, this is not considered really a strategy. It's mostly based on demand supply imbalance on the level that can be pinpointed on the level 2. So find the picture of power, again, mostly off of really good daily charts, gapping stocks, and I use the gaps in the morning mostly. Extreme relative strength, mostly for the afternoon plays, and reversal plays mostly for late morning and early afternoon is when it's best. Scalp plays throughout the day. Fossil just triggered. Okay. Scalp plays throughout the day, and that's not a strategy, but those are kind of the 4 things that I do personally, the 4 strategies that I do. Okay, the 4 strategies that I do. because the fossil is extended, I don't think it's gonna be ready to rock and roll right away. So I just giving you a heads up that I don't think fossil is gonna rock and roll right away. But I like it enough that I'm in it. Okay? But it's a bit extended, and I don't think it's gonna really go. Okay. First step again is to focus on strategies. Got it? That's the first step. Those are the 4 that I trade. Day trade. I have 8 different strategies for swing trading. Second step is find a high probability pattern. Find a pattern on the proper time frame. So you might say, well, which time frame? So when I say find a high probability pattern, there's 1 minute, 2 minute, 5 minute, 15 minute, 10 minutes. Some people use 3 minute time frame. Which chart? Which time frame? Well, for me, I am usually between 9:30 to 10:30, between 9 to 9:30, between 9:30 to 10 o'clock, I'm on the 1 minute. Between 10 o'clock to 10:30, I'm on the 2 minute. Between 10:30 to 11:30, I'm on the 5 minute. But let's just say, in general, the first hour of the day, on the smaller time frames, focus on the 1, the 2, and the 5. Okay. Between 10:30 and 12 o'clock, focus on the 5, the 10, or the 15. I don't use the 10, so between around 10:30 to 11 o'clock, I'm only on the 5. Between kind of 11:30 and after, I'm on the 15. And in the afternoon, I'm exclusively focused on the 15. Some people trade the 30-minute charts. I don't. There's no problem using the 30-minute chart. Then you can use it also. Does that make sense? So I'm just trying to simplify it here. The idea is to find a high probability pattern that looks good across the multiple time frames, on every time frame as much as possible, but in the early part of the day, on the smaller time frames, in the latter part of the day, on the larger time frames. In between, I would say around noon, on the 5-minute chart, mostly. Okay. Now, what kind of patterns are we talking about? What is it that we like? Pullbacks. Here's some example. Any pattern applies. Whatever it is that you gravitate towards. Some people like to take only pullbacks. I used to only take pullbacks. I didn't used to do breakouts. Some people like to play breakouts. Ifan mostly plays breakouts. Mostly. Continuation patterns. The 1, 2, 3 is a continuation pattern. Reversal or failure patterns like the W or M patterns, or climactic buy setup, climactic sell. Those are reversal plays. There's many other setups, but those are the main ones, by the way. Those are the main ones. Scalp plays off of the 20 MA or the 8 MA on the 1 or the 2 minute chart. Scalp plays. So any pattern you like is fine, as long as you know it works, okay? As long as you know it has an edge. The pattern repeats, has an edge. The third step, and remember what I said, I can almost guarantee that you would make money. I can't guarantee. There are no guarantees. If you follow these 3 steps, time your trade with the market. So for example, the market is weak, so that's kind of the disadvantage to being long the fossil. The market is weak unless we think the market is range bound and is gonna bounce back up. Does that make sense? So fossil kind of does not have the market timing. Okay? Time your trade as follows. If the market is bearish, look for weak stocks basing at the lows, or on a counter rally to resistance and or the declining 20. So this is how you time your trades. I'm just trying to help you figure out how do I time my trades with the market. Well, here it is. If the market is bearish, focus on shorting. Where or what do you short? Stocks that are basing at the low of the day, or that have a counter rally towards the resistance or the declining 20. Okay? Most of the time they coincide, the resistance and the declining 20. On what time frame? We already discussed that. If it's in the morning, you're going to be looking at the larger time frames. If it's in the afternoon, you're going to be looking at the smaller time frames. And then if the market is bearish but oversold, extended to the downside, then look for extreme relative strength, something that stayed at the highs Okay. Or look for extreme relative strength or climactic buy setups. The market is not extended to the downside right now, but if it was extended to the downside, then I would start to look for climactic buy setups. Does that make sense? So if the market is bearish, we look for short. If the market is bearish but really oversold or extended to the downside, then we look for extreme relative strength, things that stayed based at the high of the day, like the PDD, or climactic buy setups. Okay. Now, what if the market was bullish? If the market is bullish, look for strong stocks basing at the high of the day or on a pullback to support. Okay. What if the market was bullish but way overbought, right? Very extended to the upside. What do you look for? You look for extreme relative weakness, things that are basing at the low of the day, couldn't even get off the low of the day, or for climactic sell setups. And we know what climactic sell setups are. Okay. Looks good, Ted. I think the GOCO looks decent. And by the way, the VRM is working, but I didn't like it enough to do. I think the GOCO looks good as a short. Looks worth a shot. Okay. What if the market was sideways? What if the market was sideways? What do you do then? Then look to go long bullish stocks when the market is at the bottom of that range, whatever range it's in, and look and short stocks when the market is at the top of the range. Of course, reversal times in general is a great time. This is usually when I look to take trades around the reversal times. There are 9 of them. Not all of them are major. There's the 9:35, 10 o'clock, 10:30, 11:15, noon reversal time, 11:30. 1:30, 2:15 to 2:30, 3 o'clock, and 3:30. You don't need to even memorize them, but you should understand which ones are major, which ones are not as important, and try to time your trades around the reversal times. How often do you hear me say, before I take a play, when we're looking at something and we're trying to get in it, how often do you hear me say, what time is it? I'm talking to you, I'm talking to myself. I check the time. How often? Every day almost. Say, okay, hold on, what time is it right now? I look at the clock, right? All the time. CVAC looks good. Yeah, CVAC looks good. So use the reversal times to your advantage, because that's when the market reverses. Let me show you a couple of examples, and then we can look at today's trades, yesterday's trades, this week's trades, right? So this is a stock that was actually a breakout on the daily chart. So the daily was pretty good. It also had a gap over red bar. So that gets the first point. Find a picture of power based on the daily chart. Okay. Find a stock that has a compelling daily chart. Okay. Then find an intraday pattern. This is known as a 1, 2, 3 setup. So the initial igniting bar, the doji bar, you play long above that doji bar's high, stop under the doji bar. Okay. And then make sure you time it with the market, that the market was also almost doing a 1, 2, 3. Does that make sense? The market was bullish also. So that's picture perfect in that it has all 3 elements. It has the perfect daily, perfect intraday, and perfect market timing. Does that make sense? Okay. How about this stock? Was gapping under a base. As you can see, was gapping under multiple bars on the hourly chart. So that's okay. That's good. Picture of power. Intraday breakdown. It didn't really go very much, right? But that's a base breakdown at the low of the day. By the way, that's my favorite type of a breakdown. I think I mentioned that yesterday. Is when we have a pop, and then the market or the stock goes down to the low of the day and bases at the low of the day. Remember the WTRH a couple days ago? That was my best play. It was like this. It was like that. So, and then the market was weak. So you see what I mean? That's, if you follow these 3 steps on every trade, just 3. I'm not asking you to follow 20. I'm not asking. Almost guaranteed to make money. Almost. Here's a stock that was breaking out, right? The day of the gap, this day, the previous day, did not really move. It didn't move much. Okay, when a stock gaps, and if you like the gap, this was a breakout gap, but the gap doesn't go anywhere, you can watch it the next day. Again, if you look at a stock and the stock, if you find the gap and the gap doesn't go on the day of the gap, then that's when I carry it over to the next day. That's when I look at it the next day. Next day, had a wide range igniting bar, pull back to the rising 20. Beautiful. 5-minute buy setup. Look at the 15 in the morning, it had that igniting bar, pull back, and had another 15-minute buy setup later in the afternoon. Does that make sense? So those are the 3 steps. Now, if we were to look at real charts, like for example, what were the calls today? There were only 2, but LI from EFON. I did have that call on the AMTX this morning, but I couldn't type it in because I was on the mic at the open. So check it out. This was a 5-minute breakout from EFON today. So here it is. So basing at so first the daily. This was a buy setup that was ignited through a gap. Okay, so professional gap. Goes up to resistance, in fact takes it out and bases at resistance. Remember what I told you about my favorite type of a breakout is when it goes to the prior high and bases, or it drops to the prior pivot low and bases. So there it is. So this is a base breakout. Okay, let's see what time it was done. Notice reversal time 10:30, almost 10:30, 10:20. This bar started at 10:25 to 10:30, so almost at the reversal time, but 10:25 or so. Let's check the Qs around that time. I don't even know, honest to God, I don't even know what the Qs looked like at that time. 10:25, 10:30. Check it out. See it? Buy setup. Perfect timing with the market. And how did it work? Home run. Does that make sense? What about and you don't always have to get all 3 steps, all 3 criteria. You don't always have to get them to have them. But if you do, you're almost guaranteed to make money. What about like is there anything else that we can check? I mean, I can check on the AMTX to see if it had all 3. We know it had 2, the gap this morning, the 1, 2, 3 on the 2-minute, but I don't know if it had market timing. Early in the morning, the market is not as important as later in the day. Okay, but it had the gap, it had the intraday pattern, the 1, 2, 3. I don't know if it had the market. I mean, it was at 9, like first 5 minutes of the day or so. So I don't even know if it had market timing, but less important. INO, let's take a look. INO, this was a climactic. I didn't do it, of course. So things that are on their own page, it's not as important that they have great market timing. But daily was good, right? Start with the daily always. Huge green bar into the 200, into a pivot, right? Into resistance. And then what time did it go? 9:50 something. So almost 10 o'clock. I just want to see what kind of timing it had with the market. 9:40. I guess it probably didn't have good timing. It didn't really have good timing. It happened here in this bar. But again, if it's a climactic buy setup, sell setup, doesn't have to have great timing. The only thing about climactics, if it's a climactic sell setup or climactic buy setup, you don't want to do it if the market is, you don't want to short it if the market is, I can't draw anymore for some reason. It gets stuck. You don't want to do it if the market is going, if it's going climactic as a short to the upside and the market is going climactic to the downside. That's when you don't want to do it. But otherwise, climactics is one of those strategies that you only really need to have the 2 criteria, not the 3rd one. Any questions about this before we switch to live charts and start looking for trades? Any questions about this? Yeah, this is recorded. Yeah, no problem. This is recorded. So you'll have the recording later on. Any questions about this? Again, very simple, very easy. I'm only asking for 3 steps. Can I explain a rounding top? A rounding top is when you have an uptrend. I'm going to stop the recording first. I do have a video on the reversal times. By the way, if you have any questions, make sure to contact customer service. If you're interested in joining the room, if you have questions for me, also reach out to them. They can forward my email, just info@t3live.com. You can also speak to a person live by calling 888-998-3548. Okay, so make sure to reach out to them if you